Welcome to Money Talk with Michael. I'm Michael Eastham, president of Fellowship Financial Group. Money Talk with Michael is our weekly broadcast where we answer your questions about finance, investment, retirement, and all things related to money. Remember to send in your questions to the email listed in the description box below, and you might hear your question answered on the next Money Talk with Michael.
I recently inherited an IRA with $140,000 and a rental property worth $125,000 from my uncle. There's no mortgage on the house and it's rented for $1,000 a month. I'm not sure I want to keep the house, but what are some things to think about with both of these inherited assets?
All right. Well, certainly sorry to hear about your uncle's passing. But with these new assets, there are a few things that you're going to have to start thinking about. The first thing is that you're going to have to take money and, first of all, roll that into what's called a beneficiary IRA. And then within 10 years, you're going to have to pay tax on the full amount. So that's one thing to think about. If you don't have the cash from that rental property, then you're going to have to pay the tax from some other source. And that could be a determining factor as to whether you hold on to the rental property or you sell it. One thing to think about if you do want to hold on to it, or even if you don't, the fact of the matter is you should think about the tax impacts, because you're not going to have any capital gains because it's inside of an IRA, but you will have to pay tax as your ordinary income rates. So what's the approximate return? I'll use some numbers just based on what you told me. If you're getting $1,000 a month, that's $12,000 a year. I'm going to guess that your taxes and insurance are around $3,000. So that nets you about $9,000 per year. So the return on $125,000 is about a little over 7%. That's a pretty good rate of return from the income of that property. So, especially you think about, we're in such a low interest rate environment, and if you've got good tenants, then it could certainly be something that you want to hang on to. So the question you have to ask yourself is, do you want to be a landlord? I mean, if you are comfortable being a landlord and you understand all of the issues that can go with being a landlord, fixing toilets and, electricity and dealing with bad tenants occasionally, then and the income to you is worth it, well then hang on to the property. It could certainly it's giving you a good rate of return right now, and most likely will do so going further. If you reallocated those funds, or if you didn't want to have to deal with any of those issues, headaches of being a landlord, then reallocating those funds, you'll want to know where you're going to put that money in order to get a comfortable rate of return. 7% or greater means you're going to have to take some heavier risk in the market or some other type of alternative investment. But hopefully that gives you some fodder to think about. And of course, reach out to us if we can help you even further. Thanks so much. Thanks so much for watching. Tune in next Monday for another edition of Money Talk with Michael. And don't forget to send in your questions and check out our website at fellowshipfinancial.com and our social media platforms. And if you'd like, you can schedule a 15-minute complimentary call to get your specific questions answered. Everything you need is listed in the description box below.